Have you ever wondered where your revenue is going? Like somehow you're making money and your profit isn't showing up the way that you thought it would. The truth is, you need to understand your expenses because that is the missing piece. Today, we're talking about three things a business owner must know about their expenses: what they are, how they're impacting their bottom line, and how to stay on top of them to remain profitable. Let's dive in so that we can take control of your numbers once and for all. Welcome to another episode of Harmonious Wealth. I'm your host, Iyanna Vaughn. This is episode 21, and we are talking about expenses. In episode 20 last week, we talked about all about your revenue, three things you must know, and we're traveling along in the profit and loss statement, also known as the income statement, on to expenses. And when it comes to expenses, it's like, what should I be spending on X in my business? Like, what should I be spending on team? What should I be spending on like software subscriptions? What should I be spending on like accounting services, things like that? And a lot of times when it comes to like revenue growth in your business, there's an increased growth in your expenses, which leaves you with depleted profits a lot of times. And I know I was on a sales call with a service provider, and that exactly happened. They were experiencing like increases in sales, and then next thing you know, they increased their team costs. They increased like they actually got a vehicle, and then that next year it was really hard to maintain the expenses that they incurred because then revenue actually ended up decreasing that following year, and they just felt like they were just not on top of their cash flow. And what was interesting is while the revenue slightly decreased, expenses stayed relatively the same or just increased a little bit, which really impacted profit, right? And that is why you must create a profit plan in your business. So, speaking of profit plan, before we dive into today's episode, I have something exciting to share with you. And if you ever felt like out of control with your cash flow and you feel like your revenue slipping through your fingers, I have the perfect tool for you. The Harmonious Cash Flow Planner is designed to give you clarity, to give you structure, and to give you actionable steps to manage your finances and hit your goals with confidence. Stick around to the end of this episode, and I'll tell you exactly how you can get your pretty hands on this transformation tool today. When it comes to expenses, I I just have to think of it in two different categories. I just have to, because I like to think, especially if you are a service provider, when I think of expenses, especially for a service based business owner or a product based business owner, I like to think of it in two different categories: your direct costs and then your operating costs. So, direct costs are directly tied to how you deliver your service or product. So think of like transaction fees. I mean, that's like a very, very, very minuscule scenario. Or think of like your subcontractors or like your team that helps you actually deliver on the product or service that you're selling, like your shipping costs if you're a product-based business owner. Those direct costs impact not only your profit margin, but your gross profit margin. So, gross profit margin, well, profit we'll talk about in the next episode, but let's just kind of have a super quick formula. Your revenue minus your direct costs equals your gross profit. And that tells us exactly how your pricing is performing in your business and how efficient your direct costs are in your company. Because the more that you retain in gross profit, the more that you're able to have for your operating expenses, especially with paying yourself in your business. So if it's too high, right? Your if your direct costs are too high, now you're trying to figure out, how can I pay myself? How can I cover these expenses? How can I actually pay off my credit card finally if my direct costs are exceedingly higher than it should be compared to my revenue in my business? Um, I know when, I talk to my project-based service business owners, and they perpetually underprice their services, and they can't seem how to really understand where it's stemming from. One, because they're not looking at it from a point of what is my direct cost and like what am I retaining after I direct after my direct costs in the company. And when I look at service based business owners, especially project based, I would love for your expenses to not exceed 30% of your revenue. So what that means is, say, for example, if your delivery person or like someone who helps you deliver on your product or service that directly relates to your offer, if they are like more than 10%, more than 20% of your revenue, that's really impacting your gross profit and really impacting how you are able to afford the rest of your operating expenses. And a good rule of thumb for your expenses, again, is to not be over 30% because it helps you. If it's over, you can then look at some efficiencies within your team and processes. And then you can also make non-negotiable decisions for your revenue so that you're not perpetually underpricing your services. So the second thing that we must know about expenses in your company is your operating expenses. So operating expenses, they happen whether or not you make money in your business. They include like your business license, they include like any office expenses. If you're renting an office space, they include your rent. They want their rent on time every month, and it includes like the things that happen whether or not you make money, and they still apply. So when I'm thinking of, again, a service-based business owner, let's say it's a different one. Let's say the direct cost, is 20%, and then they have a pretty high gross profit margin of 80%. And then let's say like their operating expenses is like another 30%. So that leaves them to a profit margin of 50%. Not everyone is going to have 50% profit margin, but that's just an example. Now that we kind of understand like your direct costs, and now we kind of covered like your operating expenses, when you have a handle on it, you're able to maintain healthier profit. So say for example, when I think of like what you should be spending on like team, um I like to think with your operating expenses no more than 10%, and then with your person that is, say for example, delivering on services, is going to be about 10 to 15% of your revenue. So then holistically, your total team is about 20 to 25% of your revenue. Now, that might change if you have a project based business and you have like your subcontractors are executing projects on your behalf, of the company's behalf. That changes. But it's really important to look at things like with categories, as well as like assessing the ratio of like the percentage of revenue. So say for example, if you are a video production agency or you're a marketing agency, and like you have like a videographer for every project is X amount or X percent of your revenue. Once you have a trend and you get to see those things, you're then able to create guidelines for yourself. I have what I will share with you with the Harmonious Cash Flow Planner is like a profit guideline sheet. And that guideline sheet helps you just kind of just like a baseline of where your percentage of revenue should be based off of your expenses, so that you can maintain or keep half of whatever you're earning so that you can pay yourself from your business. So the third thing that you must know about revenue in your business is, have they increased or have they decreased in your company? And, ignoring the rising of expenses in your business often lead to shrinking your profit margins, even if your revenue is growing. Remember when I mentioned like when people are like growing their revenue, but their expenses are exceeding at a higher rate, that makes your profit decrease in your business. Do something for me, please. If not now, put me on one tab, put your bookkeeping on another tab, and just compare like your expenses this year, as in let's just say 2024 versus 2023, or whatever current year you're in versus the last year. As of this recording, we're in the beginning of 2025, but whatever, even if it's a quarter, compare the last quarter versus the previous quarter. Did your expenses increase along with your revenue? Or did your expenses decrease, but your revenue decrease as well? Like, how can you compare? Or what is the comparison for you? So when you look at like increases, what are the key categories for those increases? Is it like software? Is it marketing? Like what were you doing? Because when you look at some of these numbers, you're going to get more connected with your finances so that you can understand how your business is operating and you're not just guessing. And that way you can evaluate some of those results. So, when I think of profitability in your business, in regards to expenses, it's not just about not spending money so that you can have more profit. I remember when I have a startup client and we typically do like valuations based off of a potential seller's finances. And just like with anyone, right? Like you don't want to hide certain expenses to make your profit seem higher, to potentially just have that vanity number of like, okay, I have this profit. But what are some things that your business must have in expenses to maintain, especially if you want to sell eventually? And, that might be, can you afford to actually pay a CEO payroll in your company? Like, are you underestimating your expenses in that way in your business? I love a good profit margin, but I want to ensure that the type of business or the type of industry that you're in, you're spending on the right things. Because if you are building your business to sell, you need to show that you can actually afford certain things in your company. And, once you kind of assess, your expenses, ask yourself these questions. Is it supporting my growth? Can I negotiate a more cost effective way to like decrease the expenses strategically? Let's say, for example, if you have like a credit card company that you've built a relationship with for years and you're on time, you're paying it in full most of the time. And if you do, it's like very little times where you have interest. What if you can negotiate lower interest rates with your credit card company? Like that would not hurt. What if you can negotiate or look at your software subscriptions? I look over them with clients every year, every 6 months, however long we need to just kind of gauge it. I say every year just because we just did it in January and we're like looking at everything and we're seeing, okay, I helped a client cut out like over like 200, almost $300 worth of monthly software subscriptions alone because they were understanding what was supporting their growth and what wasn't. And, if your expenses are down and your profits going up, again, I don't want you to just hoard money. What are some ways that you can strategically reinvest what you've been saving in profit that is going to build high ROI? I want you to take some time to do a simple year over year expense comparison and see like how can you identify trends, highlight the categories which have like significant increases or changes so that you can further the review to just kind of make sense of it. Expenses don't have to be so overwhelming when you have the right strategies and tools in place. You want to stay intentional and stay profitable and make it the best year yet for you. What tip will you be using from this episode for you this year? Let me know in the comments section. Or also let me know if you did a year over year comparison. I'm waiting. Even quarter over quarter, month over month, any comparison, please let me know in the comments or just DM us on Harmonious Wealth on Instagram. Do you want help getting a clearer picture of your expenses? Grab the Harmonious Cash Flow Planner to help you track, assess, and optimize your cost in your business. Whether you're dealing with seasonal profit dips or planning for growth, this planner is going to help you turn the chaos to clarity. Grab your copy today and make cash flow harmony your superpower in your business this year. Visit lovelyfinancials.com/planner or click the link in the show notes to get started. If you're a woman growing your business and your family and want to release the worry around money in your business so that you can build personal wealth and create a legacy, subscribe to Harmonious Wealth either on YouTube or anywhere that you listen to podcasts. I'm on a mission to help 100 women reach at least $1 million in net worth so that they can create generational wealth while breaking negative generational patterns. If this aligns with you, I'd love for you to be a part of this community. Join us for more episodes of Harmonious Wealth. Bye.